Good morning, friends. Let me get my desktop settled. Okay. Let's take a look at the dollar on the daily. So, yesterday I talked about this balanced price range right here. You can see it better on the 4-hour, but I just want to draw your attention to the fact that we dropped. And ICT a few weeks ago talked about how to go and take this buy side, he would not want to see this balanced price range violated to the downside, which we did. Took out some sell side liquidity. Excuse me. And now we're retracing up into it. We got a little higher than I expected, but going down to the 4-hour, just taking note of this 4-hour fair value gap. It's a SIBI. So as you can see, our bodies are still closing inside this balanced price range. And this balanced price range really is like, it's really like that. So we're still in it. I'm gonna keep it to that though. But I think if we start closing any candle bodies above this fair value gap, then I feel like we could revisit this gap down and maybe the buy side. We'll see. Like I said, we don't trade fundamentals here, but in terms of the dollar, just understand that, big drop on Fed pausing rates, a lot of volatility going on in the Middle East, which could make it go higher. We are in very uncertain times. So again, we could see a lot of volatility in the form of our PD arrays just being tossed around in general. So if we start closing candles above this fair value gap, I'll expect this gap right here to be visited. We'll talk about that when it starts happening. I note that because if you notice on the monthly of the dollar, so I don't go to the monthly often, but you can see we had this fair value gap BISI. If you draw a fib out on it, we came down to its consequent encroachment very nicely. On a monthly time frame, that's almost perfect. So because of that, I'm very curious. I mean, we just started this monthly candle. It's the month of November. But when you are trying to, when you have multiple, when you're trying to figure out the draw on liquidity, and you're a little uncertain and you're waiting for more data, it's good to know what levels is price sensitive to on the buy side and the sell side. So in terms of the month just opening up, us coming down to this monthly consequent encroachment and reacting off of it, we could react. So the monthly consequent encroachment is this. We could react off of it, come up, enter this SIBI to go lower. But we could also react off of it to go higher. So that's why one of those situations where, wait for more data. We're going to wait for more data to get a better idea on where this dollar is going. Once the dollar starts to find more direction, I think trading will become a lot easier. Doesn't mean we can't find setups. So I'm going to continue to try and find setups. But today's context of the dollar is watching it in, again, this 4-hour SIBI. can see these candles came up to the top quarter, but didn't close any bodies, and we're still not closing any bodies. If we close a body in the top quarter of this SIBI, then I'll switch my mind and say we're probably going to go above it. But until that happens, I'm going to hold off. It's good to know the context of where we are on these higher time frame charts, so then when we go to the 3 chart view, we can kind of get a better idea, more context. Going over to NQ on the daily. So we haven't taken this high yet, which I'm expecting us to. Drew out the consequent encroachment of that wick just because it's a level right before that high. Going to the 4 hour. You can see this previous level. We came down to it nicely, which I find very interesting. We're also on the 4 hour entering this BISI. It's the buy side. Something that I think was very notable was this 1 hour wick. I'll take this off so you can kind of see it. Very notable. If you notice, this 4 hour wick it's inside of there, but when you go to the 1 hour, I think what should draw your attention to this 1 hour wick over this 4 hour wick is see how there's a whole price movement inside of it. So when you draw it out, that's the wick. You can see we have this whole price fractal, price movement inside of that 1 hour wick. And I thought this was something where I feel like ICT didn't really do a huge in-depth lesson on this. He mentioned it, and I've like he did it in like one video recently, maybe 2. But when I started looking into it more, it was one of those things where it's just like, that's so easy for my eye to see, and I understand it. So I really like it. I really like that we're seeing it right now. So we're gonna drop down and kind of explore, because remember, these wicks are technically inefficiencies. He did it on a lower time frame. I think he did it on something similar recently. But okay, so this blue box is us inside that hourly wick. You can measure out the consequent encroachment of this final wick. We came down to it very nicely. But if you go to the 5 minute, you can see even better. What this really was kind of a 15 minute, you can see it too. It was a small market maker buy model. Now this happened overnight, so the peak of it was 2 a.m. I don't trade those hours. Even if I saw it, I probably wouldn't have traded it. I'm usually sleeping. On the 5 minute, you can see the original consolidation right here. And then you have the first leg, second leg, smart money reversal. Where is it reversing? It's reversing at the consequent encroachment of this down wick. Very significant. Then we have the distribution all the way up. And we're finishing it by taking this buy side. So I just want to note that that's good context as to what happened overnight, and kind of going back to what I said about the dollar. If you go to like the hourly, it's very easy to say this is our draw on liquidity, but it's easy to kind of hesitate because we've come so far that you could say retracement is warranted. But I think even yesterday is a good example of, especially on the hourly, I think the hourly forecasts this very well, because I think there's a big difference between when you get to the 15 minute and when you jump to the hourly. The hourly, since there's obviously a lot less candles, the market kind of tips its hand a little more obviously because there's just less candles. So what I mean by that was we had this run up yesterday, took buy side, came down, took sell side, and then we came back in the middle of it. Then you have right here us come up, on the hourly, we took the swing low. So what I'm really trying to say is you can the swing lows and the takes on liquidity really help you figure out where you're going on the hourly, and it's a lot of candles in the lower time frame. So you can see us take this swing high here, and yeah, it chopped around, but we eventually came and took sell side. When we took sell side, we eventually came back up. So if you're framing on the context of taking hourly swing highs and lows, you can have a pretty good idea of just like getting a direction, like being on sides in terms of this hourly context. You can see, so we took buy side, came down, took sell side, we came back into the middle of it, and we didn't take a trade until we left. But even before that, in hindsight, you can see us take this hourly swing low before going higher. So that just kind of explains how the hourly can really help you figure direction and pick the draw on liquidity. And I'm going to do that today, kind of what I said in the dollar. Like when you're trying to figure out if it's going for buy side or sell side, look at what levels it's respecting on each side. So we came down and swept this, but the bodies respected this swing low. So how is it behaving to the PD arrays or the levels on each side of the market? So in the context of today, NASDAQ, we came down into this BISI, came up, we retraced down into this wick. Remember, wicks are PD arrays. We had a whole small fractal inside of this wick, respecting the low, coming up. And now going into the day, I want to see if we stay above this new day opening gap. This is new day opening gap, this box right there. So yesterday, if you know, was it yesterday? I think I deleted it. Yesterday, we had a new day opening gap. We had the opening range gap right here, and remember, on the smaller time frame, we came down into that opening range gap, reversed immediately, broke market structure, and then we found an entry. So I like those things, and when they coincide, being above the new day opening gap, being above the opening range gap, I think those are two signatures that we're going to, like, you'd want to go long in those cases. When you return to go into them and then leave them. So I'm gonna probably look for something similar today, as long as we're above this new day opening gap. I'll see if we form an opening range gap. This is the first level of buy side, but again, Powell's talking at 9:15. I will not be trading probably until the afternoon, unless there's something that's such a A+ setup. But again, I would say true A+ setups maybe come once, maybe twice a week. And I think the likelihood of it forming would probably not be when he's speaking. But if we take this liquidity, I think it would be safe to say that we're going for next level, consequent encroachment of that daily wick, and then that daily high. So that's that. I think I'm going to look at NASDAQ again today, because the same reason I didn't really like ES. I feel like you could see it even better. I never know if somebody else can see this when I explain it, but when you look at ES, even like we're so close to market open, and look, it's still like so robotic and barcode looking. And then if you look at NASDAQ, there's way more wicks. Like it's the whole like half of these candles to the upside don't even have wicks on them. See how this swings? Swing doesn't have a wick. Doesn't have a wick. Doesn't have a wick. No wick. No wick. And if you go to NASDAQ, we got wicks on all those swings. I'm wondering if it's just the holiday season. I mean, this is one of those things where it's important to journal, because as you get years and years, I'm not gonna be out here saying that I'm like a 5-10 year seasoned trader, but when I do get to that point, I'll be able to look back on, you know, this whole fourth quarter, and I start to see repeating things. If we start to see, you know, behaviors, that's kind of when it's important to journal and know, oh, like this is what happens usually around this time of the year. And maybe I trade NASDAQ instead of ES, because ES doesn't, even though I think ES yesterday was fine. It's easy. It's hard to read this. And it cleans up usually after 9:30, but I feel like this is indicative of, I don't know. I don't want to read that. I'll leave it at that. So I have Powell speaking at 9:15. I'm curious as to what he's actually talking. Where? Okay, gonna go to the 15. Again, so remember the context of the dollar. The dollar was retracing into the upper portion of that SIBI and that balanced price range. We were wicking up into the top quarter, but we weren't getting a candle body to close in it. So when I'm looking at these highs, I'm just keeping that in mind and knowing that if we start to see this dollar drop, that's what's happening. So it's respecting the upper portion of that SIBI. It's good to know, like, what, basically I'm just keeping in mind what the significance of these tops, because say the dollar doesn't drop and it starts to come for these highs and it's spending the rest of the day making higher highs, I'll know that, oh, we're like we're moving out of that SIBI, we're violating that SIBI on the dollar 4 hour. So keep that dollar context in mind. I think NASDAQ and ES on the 5-minute, their highs and lows were looking good this morning, this overnight. They seemed to be working in tandem, which was nicely. And just because this is a market maker buy model overnight doesn't mean we have to expect like a continuation, because the whole context ends once you come back to that original accumulation. But we came back to that original accumulation like right around here. That was when we finally took it. And then you can see us retrace on some sell side, come higher, retrace for some sell side. So I guess Powell's technically speaking right now. But again, we're not trying to trade it in terms of like, oh, he's going to say something that the market maker is going to use. What the context we're saying is, the banks are going to use just the fact that that is on the calendar as a time to manually manipulate the market. and if you're trying to be safe, just chalk that up to the whole AM session. On my Twitter right now, somebody I'm following, it's like they're in one of those like live sessions, and it like shows up on the right, and the title of it is Live Trading with the Morning Momo, Pal Incoming. So I feel like that's enough. That's all you need to know. That's the sentiment of retail right there, and the banks will run on that. They're gonna run. Live trading in the morning Momo. See us come down, come a wick, just a tick over the consequent encroachment of this new day opening gap before sending it higher. So again, for this channel, we trade between 9:30 and 10, the 2022 model. If you can look on the 15 and the 5, so for those to be significant, in my mind at least, you have to be taking out a 15-minute sweep of liquidity. And on the 15-minute here, you can see there's no, at the 9:30 open, we didn't take any swing low to the upside, so that's a pretty easy one to just know, like, it's not there, the model's not there. Got a nice opening range gap. I like that. Notice how oh god, it's beautiful. We opened, delivered south side to it. So I kind of, when you do put it in regular trading hours, what's happening is, this is yesterday at market close, 4:10, and then this is today. So there's a big time gap right here when you go to regular trading hours. If you drag this and it crosses over into that Tuesday, when you can see it right here, when you go to electronic trading hours, it will now extend that all the way to Tuesday back here. What I like to do, this is just a preference, I like to drag it and leave it right there, because then I can see, since it starts right here, I can see if it makes it stand out more to my eye if we've delivered sell side and buy side. So notice here we open, come down into it, and then leave it. So we immediately come down, deliver sell side, go up, deliver buy side. Now that's just on the context of this 1 minute wick, but it's a little, that's usually why you'll see me set it up like this. And you can notice when we open on this next candle, it comes to the bottom of it. Came up, swept that buy side. Noted. But look how perfectly that 931 candle came down and delivered to the bottom of that opening range gap. It's the bottom of this opening range, this yellow thing, isn't the like I didn't put the level because that's where this wick ended. I put it because that's where this Tuesday at 410 close level was. And then what I do, like I just explained, I drag it over. But look how that 931 candle just delivered perfectly to the bottom of it. Now we came up, took that buy side, huge wick, huge wick. If we break below this opening range gap and this new day opening gap, I think shorts would be pretty nice. And what we'd be targeting was, we'd be targeting this London low, and then this previous day lunch sell side liquidity at the bottom. That might be so good that I might want to take it. But we'll see. It'll depend on how we respond to these two levels. Dollar is continuing to go lower. This could actually be a pretty decent 2022 model. Okay, so we took liquidity on the 15-minute, significant high. It's also an hourly and a daily high. And then we'd want to see, yeah, so that's kind of what the context would be around for any shorts, would be us taking liquidity on this pretty significant high, reversing. I'd wait for more of a 5-minute market structure shift than this 1 minute. We actually didn't even get a shift on the 1 minute, but and just the reasons why I love these concepts, like smart money concepts, is it just gives so much context to why price is turning at certain levels. Like I explained to you why this wick came down to where it did, came up, took liquidity, turned there, came down, touched the top of this opening range gap. slow open. But I like the levels we're at right now. I'm watching this 5-minute candle body, see where it closes in relation to that wick. I think if it respects the consequent encroachment of this wick, we'll probably see a 1-minute expansion to the upside. That next 5-minute candle will be going up. But again, I am being weary because we took this very significant hourly, daily high. It's kind of looking ripe to just rip against shorts. Get people breakout people thinking it's going long. I would be a little concerned to go short with the dollar making these lower lows. I'm going to take this blue level off. I was really just wanted it to be the context, to draw your eye to that, the area of that hourly wick. And then remember what I said about taking hourly swings. So you can see this swing right here. This was yesterday's PM session low. We took it and then went for the buy side liquidity. Cool. So my areas, I'll get a little interested when we either get below this new day opening gap or get above this swing high. I am noting right now that you can see this low on ES was equal with this low. Then it came up, and then on NASDAQ, this low came down and took that low, but that low on ES was not lower. So I'm just watching these highs and lows to make sure that we don't start trading in a market that becomes a little decoupled. Dollar is looking heavy. Notice ES is making a higher high right now. NASDAQ is not. That, wow, ES is really going up. Okay, that's kind of a pretty big red flag for me. Especially with how aggressive ES is doing that. It's not like it spent like a second above a wick or a high and then came down, and it just kind of had a little too much momentum on a price swing. This is like it really wanted to go above this high, and look, we had a candle body close and that close green, and then the next one's still pushing up. Meanwhile, NASDAQ is not. That's a little bit of a red flag there. Again, we were saying the morning Powell speaks. We are not the best conditions. Wait till the afternoon. So, yeah, I'll watch this opening range, but this is deterring me from wanting to get into anything. Look, that's the third candle that ES is put above this high. NASDAQ has not. And then I feel like, so in the example of earlier this week, there was a trade where this happened, where I forget which one was which, but I think we were trading ES, and anyway, it doesn't matter. One of the indices made equal highs, and the other one made a run above for buy side. They both broke lower, but then what we tried to do was they broke lower to a significant level, and we saw it retrace, and the market structure looked like, oh, it wanted to go above because it came down, took sell side, turned around, and it was like weird. This was in the PM session of one of the recent live streams. It might have been Monday. When it finally decided to run for that liquidity, the indice that had the equal highs, I think it was ES. Yeah, ES had the equal highs. NASDAQ took the buy side when they turned. And then in the afternoon when they were going up, ES ran way more exaggerated to take that liquidity because it was equal highs. There was no liquidity swept. And NASDAQ never even made it to those highs. So if you were trying to trade NASDAQ long and you were in a trade that was targeting that liquidity, you never got it. And that's just because the markets were decoupled and they weren't taking buy side and sell side equally the way they should. And that was like a really good reflection on how, like, why it's low probability, because there are times when you can trade it like this and it goes your way and the model pans out, but like there are going to be times when it never gets to that level you want it to get to, because this was the condition. And if there are times when that's even like possible, it's just better to not, because that's when you're gambling because there's a chance where it doesn't get to a level and you're entering anyways, and you're just leaving it up to chance, because I've seen it enough times where that happens, where I know I don't want to trade in it because I don't trust that it's gonna do what I think it's gonna do. You can see ES is even closing 3-4 candles above that high. NASDAQ hasn't even put a wick above it. We are turning, making a swing. I don't know. It's not super conducive. And then you know what? Here's a scenario that could happen. We could break lower, and it would look like a 2022 entry model. And then what happens is NASDAQ would reverse and just rip against buy stops, and it would have looked decent, but it would have looked like a decent entry, but because it never took the buy side, whereas ES did, it delivered that structure and looked like it was going first. It was in a sell program, but NASDAQ had a wild retracement against the buy side because it was decoupled and never ended up getting it. And I think things like this, the whole time and price idea for smart money concepts, like the more you sit and watch the market, the more you can believe in it. So we had Powell speaking high impact news at 9:15, 9:30. So I suggest you kind of study. I wish I could like post a picture, because there's some people on Twitter that do like really nice infographics that are like just line charts. And it's all like explaining theory, but there's different types of London sessions, and usually depending on what the London session looks like is how the New York Open will use that liquidity. So the London session that gives, in my opinion, the best New York setups are the ones that it's like kind of a boxed range. This was not that. So this was the London session where it put in a London low, and normally what you'd expect is a continuation from New York. But usually when London is in those boxed sideways ranges, they could find a setup, but they're not the best. So like the setup isn't there in London, but then the good setup is New York, because New York acts on that London liquidity. But this is the inverse of that. So London had a structure. It had this market maker buy model in the London session. So the good trading was in London. I feel like this is one of those examples where I feel like I would log on in the morning like this whole year, and you'd see ICT would tweet like, he already took a trade, and it was like 8:30, 8:50. And I feel like these were the conditions that he was able to spot ahead of time. So we have a high impact news at the New York opening range. So what's going to happen? The trade's going to be in London, and then he would probably find the London silver bullet, trade the London silver bullet, and then it's just kind of like, okay, I don't need to trade the New York. Because I said all that because I was thinking like the London silver bullet was probably, it's not the cleanest market maker buy model. I think that's because it was something in the London, it was a small time frame London session, but it was definitely more structured and probably not decoupled. Okay, so on NASDAQ, we finally went above that high. It's just a wick. You can see it looks like the dollar is making a swing low. ES is dropping. Looks like it's shifting structure to the downside. Yeah, and then you know what I was talking about, how ES looked ugly in the pre-market. It's still not looking how I'd want in the normal market hours. Just like see how many volume imbalances there are, and like how the opens and the closes. So like the open volume balance here, we close here, open up here, come down. Is like this open and close isn't lined up. Volume imbalance, open and close isn't lined up. Open and close isn't lined up. Volume imbalance. Look at these opens and closes. Close down here, open up here, close here, open up. I don't like that. It's better on NASDAQ, but okay, so I don't know about you guys, but there wasn't anything in that opening range that I was like, yeah, I wish I entered there. So now that we're into the 10 o'clock hour, I like shorts. I like the idea of shorts. If we went long, I'd probably miss the entry. I don't really trust any entry to the upside yet. And then think about it like this. On this daily chart, so we took that high. I don't know if we took it for ES. Yeah, we did. We took it on ES too. So we know today's daily candle is most likely going to form a fair value gap. We have this large displacement. As long as we don't drop all the way to this, probably going to form a fair value gap. So think of it like tomorrow. Well, Powell also speaks tomorrow, but if we're not thinking about ignoring that one little fact, tomorrow we're going to get a fair value gap. So that's going to be another PD array, another level that we can use to help build our narrative, a trade narrative. Four hour. It's looking like it wants to drop. 1 hour, 15 minutes. Yeah. Dollar's turning. I'd shoot for that sell side do we want to trade this? Could enter. I'd want to see that be a breakaway gap. Actually, I wouldn't want it to come back above this new day opening gap. I would, if this candle and the next two formed a fair value gap, I would like entry off that. Again, this is one of those things where like I'm kind of nervous trading NASDAQ. I don't trade NASDAQ, so it's like, I might want this to be a fair value or a breakaway gap, and it might, it could be one on ES, but NASDAQ could pull it back a little more. Dollar shooting up. Got the break on the 5 minute. Got the break on the 15 minute. I think we're definitely going for, well, I think it's pretty obvious to say we're going for sell side now. Okay, let's watch. Terms of levels. I'll take this off because this low is basically the mean threshold or the consequent encroachment of that. Ten handle. Let's see, maybe we'll do it on ES. What do we have for projection? We have 20 handles, so that's good for probability. That's the sell side. Came up, immediate rebalance. Let's see. Maybe I'll put it at, I'll demand a little more. I'll put it right at mean threshold. I mean, consequent encroachment. We might not get it, but I'm okay with that. Let's see. Am I okay with that? Well, that's why you should really. Okay. Come on. There we go. Seem to be a little impatient right there. Okay, so I want to see how we react at the bottom of this new day opening gap. I don't want to close a body above it. I really don't want, I want this to remain open. I like how the candle body is stopping at the consequent encroachment. I'm going to put this stop loss above consequent encroachment of that fair value gap. But see how ES hasn't even entered this fair value gap? So what happened is ES could like come up and tap that. And what that swing really is on NASDAQ is us coming back up into this. Again, this is one of those things where since I don't play NASDAQ, it's like I'm not used to reading how it behaves around like this new day opening gap, for example. I'll give us some slack on this. Do I want to give us how much? What is that? So ES is now just entering that fair value gap. See it right there. I don't want this candle body to close above this new day opening gap. I really don't. It's fucking executions. Okay. Let's see. I like to stop here also because it's, see, I'll put it right above the mean threshold of that order block. It's also above, a little bit above this 5-minute kind of breaker structure, this high, low, high, high, close. I don't like that though. I don't like that. So again, I'm still not used to how this NASDAQ moves, but I definitely don't want it to close a body above this fair value gap. I don't even like that we came up to the top of it that much. But it did, I entered the trade because it did really, I liked the narrative of us taking this significant level of buy side to then come back on sell side, especially if we got below these opening range gap and this new day opening gap. Let's see if this makes a swing high. Then we can retrace. Again, on ES, you can see this is that second fair value gap, kind of closed above it. Yeah, the stop's probably going to get it. I don't really like this trade anymore. But I should have expected that. I kind of talked up the whole morning about how it's not the best time to trade. I want it to just blow through this new day opening gap. I don't want it to use it as support. Okay. Noticing on the 5-minute how he came up, touched the bottom of these up close candles. So I want this to remain the swing low. I mean the swing high. I think if we come up and take it, then this, I mean, look how close it is to the stop. Dollar. Okay, we came up. I want this next candle needs to go down, or else I think the stop's going to be hit. Really opened up the stop on this one because it was kind of similar to like yesterday, where I had the draw on liquidity correct. It was just really the entries and the trader. I kind of talked about how the analyst had it right, but the trader kind of stumbled along the way. Again, I want this. I don't want this to turn into a swing low. We retraced to the PD array that was above 50%. So if this is where our price move started and this is our liquidity target, we retraced to the PD array just above 50% so came back into a premium to sell at a discount. I want to see this candle expand, and then I'll stick to our, that's 10 handles. Gonna move this stop. So 10 handles is what? I'm starting to run into the scenario where, I mean, it helps because I'm proving our high hit rate, but when I know like it's going to take this low, like if it goes 10 handles, it's going to take that low, and it's like, okay, I'm narrating my thoughts too much. What the heck? You guys saw that, right? Went over. Okay. Well, I'm going to move that to break even. The stop loss better work. Okay, good. That was super annoying. Maybe it was because I was fiddling with the take profit too much. I don't know. I'll have to go back and, okay, here, this is what we'll do. You go to orders. This candle low was 15.355.25. This was 355.75. So that was kind of weird because maybe it just like the TD or I don't know. I thought that the wick wicked over it. But looking at these levels, I guess the paper trading account probably didn't register, or maybe it was It was like a little glitch in the graphics because it looked like it wicked over. I'll go back and rewatch the recording. It looked like it wicked over, but the price that we have is 55.75, and that low came in at 55. Wait, no, yeah, no, I'm correct. It went lower than what our take profit was. That's bogus. Oh well. I'm fine with just doing nothing now. Yeah, I like the sell side, especially since we're below this new day opening gap. But I do like how this is another good journaling thing, kind of, because this is one of those scenarios where you have that break and you're like, okay, we have two fair value gaps. What are the chances that it comes up and enters this one? What are the chances that it comes up, just enters this one and doesn't enter that one, or it comes up and enters both? I think this should have been a breakaway gap. And I don't like it, especially because it was above the new day opening gap in the opening range. So that's another reason why I'm kind of fine with just sitting this out. I think the fact that it came all the way up to the top of this and then didn't come and take this low, I don't really want to try and re-enter short anymore. That was pretty annoying that we got the candle to wick over our take profit level and we didn't get the profit, but that's okay. Yeah, and if you notice, I moved that. So when I saw that happen and I immediately moved the stop loss to break even, I think that was a pretty smart move. I mean, in hindsight, you could say, oh, like we probably would have got the profit again. Like maybe if it went further over our take profit, it would have registered. But that's one of those scenarios where it's like, this is only a paper trading account, but if it didn't trigger the take profit, what if it doesn't trigger? Like I don't know if you understand the back end of TradingView, but if it didn't trigger the take profit, then there's a chance it wouldn't trigger the stop loss. So I moved it to break even because you don't want it to run against you and then you be already in drawdown, it not trigger the stop loss, and then you're freaking out because it's like it's just going against you. So I wanted to know, when I saw that immediately, I was like, exit the trade. Like, but I will. It's fucking annoying because you don't. If I show you the execution, it doesn't show that where I had my take profit. Okay, so I'll go over the trade. Why did I enter here? I entered here because we took a significant level of buy side liquidity. It was an hourly high. It was also a daily high. This is yesterday's high. We wicked over it, came up, came above that, but failed on the 5 and the 15. These were all wicks. We couldn't even close a 5-minute candle body above this high. We were right above the opening range gap and the new day opening gap. So I said, okay, we have this significant level of liquidity up here. If we wick above it and then shift market structure and then break below the opening range and the new day opening gap, I would take a short. So the morning, this opening range wasn't too great, but then you can see here we came up, broke lower. This was some aggressive displacement, and I said, okay, I think we are going for the London sell side. Drew out these two fair value gaps. You can see I entered at the bottom of this one. Since I don't play NASDAQ too much, I put my stop at the mean threshold of this up close candle. It's also that mean threshold on that 1 minute order block is also above the bottom of this 5 minute, if you want to call this a 5 minute order block, these up close candles, you can call it a break or two, high, low, higher, high. It was 1, 2, 3 PD arrays for a stop. It was wider again. I didn't want to run into the thing that happened yesterday where, because I'm not used to playing NASDAQ, and I'm not used to how it kind of ebbs and flows, that I get stopped out even though I had the drawn liquidity correct. So I put the stop above the mean threshold of this order block. You can see we came up, tapped the bottom of it. You can see we tapped the bottom of it right there. That also, so if this is the start of our price run, and this red line right here, in the 5 minute, that is the start of our price run. That red line is our target premium. So I'll probably start using this more, especially I feel like the market lately has been a little sideways and scalpy. So I think I'll demand a little more, whereas I feel like normally in like a lower resistance, low liquidity run market, this would be an breakaway gap and it would enter this and then go lower. But since this is clearly a high resistance liquidity run, it's going to have deeper retracements. So 50%, this PD array is above 50%. We came back up, stopped at that order block, turned around. I liked that we just blew right through. So I didn't like that we came up and closed above the new day opening gap and re-entered the opening range gap. But I said I want this candle to, when it was printing, I said I want it to blow through the opening, the new day opening gap. It did, blew through it, came back up. If you notice, this candle came right up to this candle, immediate rebalance. So I mean that's okay. Don't get too scared when you see that. You just want to confirm that this is a swing high, and then you want to make sure that the next candle, to confirm that is an immediate rebalance, the next candle displaces. So next candle displaced lower. If you were here, you saw that I did move the take profit to 10 handles because that's our low hanging fruit objective. I did think that this low was going to get taken out, but I'm really trying to stick to on this channel where I want to teach, just focus on consistency and high hit rate early on. And then what you'll realize is you can scale up with more contracts, and then you can start, because once you do that, that's the easiest part, is just getting a higher win rate, like a profitable win rate. And then it's so easy to scale after that because you get the first 10 handles and then you move the next contract to that. And then as you get more consistent and more confident, you move the next contract to this level. But I moved the take profit, and that's the sad part. You can see here the order for the take profit was 15, 3, 55, 75. The low of this candle came in, if you can see right up here, the low came in at 15, 3, 55, 25. So we went 2 ticks below that take profit target. It didn't trigger. That was annoying. When I noticed it didn't trigger, I immediately moved the stop to break even. And then it came back out and knocked us out at break even. I think the spread got us at -10. And then it displaced lower, and you know, I'm fine with not trading. I think it was probably just a little bug with the TradingView software paper trading account. Yeah. I think we're making these lower lows, so I do think it looks like we'll probably take that sell side eventually, as long as the dollar doesn't start making a higher high. I mean a lower low. Do we want the dollar to make a higher high? But yeah. Damn, that would have been a good trade. And you know what this is? This is, I've like had enough scenarios like this where I'm kind of over it, but you should be proud, or at least I should. I'm talking to myself. Be proud that, you know, we called this. We called the narrative, the draw on liquidity. We had a good stop placement, great stop placement. Around sound logic too. 3 PD arrays. Broke lower. And then it didn't trigger our take profit. And I think that's a valid reason to kind of like exit a trade. Because especially like this is a demo account, but when you're trading with real money, if I have like 3 contracts on that, say it comes against me and then like doesn't trigger, not only does it not trigger the take profit, it doesn't trigger the stop loss, and I'm 3 contracts in, and you know, we had a pretty wide stop. You're 3 contracts in, and it's 100 handles against, like 100, how much was that? Yeah, it's like 30 handles against you. It was like 100 ticks. On 3 contracts, it doesn't trigger your stop loss, and then say it starts running for buy side liquidity, and you're like freaking out. That is not good risk mitigation. Closing the trade when it doesn't trigger your take profit, that's good risk mitigation. But yeah, as you can see in the background, dollar making a new low. Oh, but what I was saying was, I should be happy that the analyst was right, and the trader also did good. The trader did good. We just ran into an unforeseen technical hiccup, and yeah. But I'm mad because it's like now I don't have that profit in the account balance, and it's annoying. And that's when you get into like this psychological struggle of trading, where it's like you feel like success has to be you making a ton of money, which in the end it is. Like the reason you start trading is to make money, probably trying to find financial freedom. So in the end, the highest level of success is the end goal. Yes, is making money, but do not let that be your only measure of success when you're trying to find profitability, because it's just going to make it harder for yourself mentally. Find success in the little things. Find success in, I found the draw on liquidity correctly. I had my stop loss placement correct. I should have got 10 handles out of this trade. So yes, I'm a little annoyed that we didn't get the profit, and that's the other thing too, is when you get confident in your ability to find 10 handles, it's easier to shrug it off, because it's like, okay, that was annoying, but I can do this again. It's not like when it's, that's how you know, that's when you know. I feel like that's a big pivot point. That was a big pivot point in my trading, was like something like this would happen, and I'd be like, I used to be like super frustrated because I wasn't consistent enough to know I could do it again. But it's easier now because I am consistent enough and I am more confident that when that happens and I don't get it reflected in the account balance, I can just kind of get over it and just be like, no, I'm happy because the analyst and the trader were correct, and I just need to wait for another day, another setup, and we will get where we need, where we're trying to go. I'm going to watch, see if we take this sell side. I'm also a little annoyed by that, not getting the profit, just because like I want this account, like I want this account to come out of drawdown, you know. I want us to, I kind of like the fact that we had a losing streak, because I thought it was a good teaching moment. It was a good documentation moment to come out of the drawdown. But now I just want us out of the drawdown and increasing the equity curve so I can start, yeah, I can like get this account to where it needs to be. But just got to be patient. Definitely high resistance conditions. Again, and then it's good thing when you're journaling. This is something I'll do. You know, have like an area where like you can like check mark for the day, whether it was like high resistance or low resistance. Because then you can kind of see, okay, high resistance conditions, we retraced into the second fair value gap. Maybe in a low resistance, you'll start to find that we don't even get there. It's a breakaway gap, and it just wants to enter this fair value gap and then quickly leave it to go for liquidity. See, ES made a lower low right there. I want to see if ES took that London low. That's the Dow. Oh, ES isn't even close to its London low. Mm-hmm. Another reason why, when the markets are decoupled, I wanna draw this trade out on ES and see. Oh, okay, yeah. So I mean that was the silver bullet. I think sometimes I forget to like explicitly call it out for you guys. Delivered 10. So if we entered at the bottom of that, the heat on that. See, that's another thing. It's kind of why I like. I'm just way. NASDAQ makes me a little nervous because I'm not used to it. Like if we entered here, that stop loss on ES wouldn't have even been 5 handles. And on NASDAQ, not XRP, NASDAQ, that stop loss was 25. They're not one to one, but I think it should have at least been like, NASDAQ's just about like double, I think. It's like 5 handles equates just about to 10. 5 handles on ES is 10 on NASDAQ. Yeah, so think that's why I get a little squirmish around NASDAQ. See a stop right at the perfectly the lower quarter. Dollar looks like it's turning around. I think the thumbnail for this video, I'm going to make it like a zoomed in screenshot of, because I'm petty. I want to make it a zoomed in screenshot of the wick going over the take profit. And I'll title the video, all caps, robbed. See how many clicks that gets. Okay, dollar. Looks like it's about to make that high. Expecting it to take that sell side right now. High resistance conditions. Say I was in this trade with more handles, I'd have my stop at break even by now. Just because when you come down, make this low, and when you retrace, so when you enter, you're entering on the theory that you're retracing or you're entering to take profit on a lower leg. So say we are targeting this, whether you had multiple contracts on and took a partial here, or you have one contract on, you're waiting for this. When it takes this leg, this swing low, you should move your stop to break even, because now, for example, right here, we took the liquidity. But, for example, if you were wrong, it could just take this liquidity and reverse on you. So when price moves below the swing that you entered on as the retracement, that's when you move it to break even. But as you can see, we delivered our sell side. I will be on in the afternoon. Enjoy the rest of your day, guys.